Surprise, surprise, NIO has sold off after earnings, and if you are like me, long NIO stock from a certain time, then you possibly weren't taken by surprise that this happened once again. Anyways, now it's weekend, let's take some time off and really think about the earnings report once again. In my last video, I was making a live stream right after the earnings came out, so that was really spontaneous. I gave you my first impressions and opinion, but now I also have the insights from the Q2 earnings call with the management, and I think he really dropped a couple of bombshells there. So it makes sense to go into that one more deeply again, in a more structured manner as well, and kind of round things up again and see whether or not this sell-off right now is justified and what it means for NIO's stock actually in the long run. So make sure to watch it till the very end. Please smash a like if you enjoy such kind of a thorough analysis. And then if you're new to the channel, please also subscribe and hit the notification button so you get a notification whenever I post a new video. This channel is all about the Chinese opportunities, so covering Chinese stocks, growth technology stocks and such that I am personally investing in. And so let's go right into it. So my initial summary was that this earning report is not super surprising. It's actually quite solid in a way, that there are some upsides that have surprised me, but also some downsides definitely. And let's once again look at the numbers that I personally have projected and estimated. As always, I publish such kind of expectations in my Patreon community. And I mentioned the guidance of the Wall Street and expectations. So on the revenue side, my expectations were 1.3 billion US dollars and 1.2 billion roughly from vehicles and 112 million from other sales. I expected the vehicle margins to increase and the gross margin also to increase slightly. And on the bottom line of the business, I expected minus 85 million US dollars in net loss. And it turns out that these projections were actually quite close to the actual numbers. So I've now updated my Excel sheet here, and what you can see, this is the actuals that came in. So the vehicle sales were actually quite a bit higher than what I anticipated. And that is good news, because this means that despite the lower numbers of the ES8 that have been sold, still they managed to have a high average sales price, or at least a little bit higher than I personally calculated with. The other sales came in lower significantly, only 83 million, notably down from actually the Q1, and obviously also down on my estimations. But overall, I'm only 3 million shy in the actuals of the revenue estimations. And then notably here is where I had higher expectations on both the vehicle margin side, which was significantly lower here with around 20%, as well as on the side of the gross margin, which came in lower at 18.6%. And this is possibly where I was most kind of disappointed on the operational side. I didn't expect those margins to go a little bit lower, and I saw that this may create maybe some issues with investors who like to see increased margins. But I think we got more insight, and later on that I'm going to cover that in the Q2 earnings call. For the operating expenses, I calculated with 150 million in R&D, came in at roughly 140 million, and then the SG&A 200 million came in a little bit higher, minus 232 million. So on the operating expenses, it was roughly higher than what I have estimated, but still quite close, only 20 million off here. And then on the net loss side, it came in only 6 million off what I have actually estimated. So a minus 90 million in net loss still resulted in a beat in the earnings per share. And so, yeah, once again here, it seems like with the beat in the revenues as well as in a beat on the EPS, this should actually please investors. But my initial take in the live stream already was that I'm not really looking that NIO is right now pleasing Wall Street, but that is exactly what they have done with this report. And so let's look a little bit more at what I personally was expecting and what I found crucial to watch as key performance indicators or KPIs for the NIO business as a long-term investor. So I had 6 major points to watch. Can NIO really beat their revenue guidance despite possibly lower average sales prices? I can check this one off. Yes, they've done that. How efficient is NIO in scaling their sales? A flat SG&A per vehicle, but increase absolute would be a win in my book. So actually here, this is where I mentioned already in the live stream that NIO has gotten operationally a little bit less efficient in terms of that the SG&A per vehicle spend has slightly increased, and I mentioned that well, I would like to see kept in line. And so if I look at this metric, previously it was at $9,108 spent in SG&A per vehicle sold, and this time it was roughly $10,600. So previously NIO has actually shown a downtrend here in terms of marketing and sales costs spent for selling those vehicles, but now it seems to go up slightly a bit, but still not in a manner that I think that this is concerning for now. So I would still put a check mark there, and I would say this is in line with where I would like to see the KPI in this regard for NIO to be. My next KPI to watch was, can NIO increase vehicle margins slightly despite supply chain challenges? So going into these earnings, we knew about chip shortages, floodings in Germany, and other stuff that has affected the supply chain all over the world, and obviously also that should manifest somehow in higher costs. And what I expected and was hoping for, that NIO could still show a slight increase in the margins despite that, because of course also the volume in terms of how many cars have sold has actually increased a little bit. But in general, it seems like these effects have been too strong in order to still bump the margins there a little bit. But let's dive into what I mentioned in the Q2 earnings call regarding this issue in a minute. My next point was, can NIO start to verify their ambitions in the area of new retail and e-commerce and show a 35% growth in other sales plus a boost of the gross margin by booking more regulatory credits additionally? This point was a clear miss, and this is possibly one of the most disappointing points about this entire earnings story here for NIO. Maybe my hopes are too high for now of the effects of NIO Life and the e-commerce part. The other sales have actually decreased from Q1, and obviously there are different effects. So it's not only about the e-commerce part, it's also about, for instance, what kind of batteries are being bought by the customers, or the battery as a service subscriptions and such. But anyways, on the bottom line here, we need to say that first of all, they didn't grow the e-commerce business as much as I have expected it. And second of all, they didn't book regulatory credits this quarter, this time. Then two more KPIs to watch. The first one, will guidance be in line to show a slight growth for Q3, but with 95K overall delivery well in reach given and the end of the year ramp? I can totally check this one off. This was a good guidance and outlook in my views. I already mentioned that one in the last live stream. So that one was bullish. I think it's really in line with the 95,000 total deliveries for this year, and so that gives me confidence, and I think that should also be well regarded by investors in general. And last but not least, will NIO show an increased R&D cost to strengthen their ambitions in autonomy and new vehicle launches, something that should be a great long-term invest to make the company more competitive? This was the big story out of this earnings. I think NIO has clearly shown that not only in the earnings by investing more in R&D, but also in the earnings report that they mentioned specifically that they're gonna launch more vehicles next year. And so this has been also, I think, the biggest news, not only about the two new models, but also that they're going to enter the mass market. And they were not shy of really showing this also to investors during the earnings report, but also in the earnings call later on. So this is what we're now going to dive into in the next step. But again, once again, I would say that this has been largely in line with my expectations there. So that's the reason why I would say that this is a very solid earnings report so far. And in my interpretation, it should also resonate well with investors, generally also like the more long-term investors in specific. So as someone who's really deeply following the company and also the management and how they develop, what I can say here, my impression is that this earnings report has been extremely well thought out in terms of the numbers that they delivered and provided, but also, kind of the little different aspects which they have mentioned during this earnings report. And that is getting even more clear so when listening to the earnings call. And actually, I also see kind of a change in the notion and also the perception of how, for instance, Li Bin is talking in the earnings call. So let me guide you through some of what I think are the most important and crucial points to understand of the Q2 earnings call, and why I think that it was really managed quite well by the management there. And I'm personally surprised the way they are articulating quite bullish what is their view on the company and the market. So one important point that William Li dropped is that in Shanghai, the first half of this year, the penetration of NIO in the premium SUV segment has reached 13.7% among all ICE cars, so internal combustion engine cars, as well as other electric vehicles. So 14% market share in the current segment is really a lot. And he stresses the fact here that it's not only for the electric vehicles, but it's also for the internal combustion engine cars. And in a first tier city, like where all of the more wealthy and rich middle class is living in China. And that gives you basically also an indication where is the future for NIO, because it shows you that NIO can achieve a double-digit market share in the segment in which they operate. Plus, Shanghai obviously is an indicator of where the rest of the country is going to head, as Shanghai is one of the most well-developed cities in China. And then you have the so-called tier 2, tier 3, tier 4 cities, mostly cities which you have possibly never heard of the name, but which have like 10 million inhabitants. And these cities are possibly lacking a couple of years in their development in comparison to Shanghai. So Shanghai is telling you the future, and NIO is stressing the fact here that in this future they are doing a good job. In fact, if I go into my business case around NIO and where it will be in a couple of years, and I also split actually the total addressable market that NIO has for the different segments. And in a premium segment, I mentioned that NIO could reach up to 22% of a market share in the future. And as NIO has just mentioned, they have now reached around 13%, and that is roughly what I have estimated that NIO would achieve by 2024 and 2025 in this segment. So I'm currently actually calculating with only roughly 3% of market share, which obviously is also for the entire country, right? So it will be lower in other areas, not in Shanghai, but the fact that they already achieve like the 14% market share in Shanghai tells you that it is possibly likely that they can achieve those numbers on a broader level on the entire country in, let's say, 3 to 4 years. So this is maybe just a tiny piece that went a little bit unnoticed by investors there, but for me, reading that, this is really a good validation of my business thesis and my business case there. And so I was happy to see that, and also the way that William Li communicated it here. For instance, later on in the earnings call, he also mentioned that internally, of course, we have a very aggressive market share target by 2025, but he wasn't disclosing that one. And I thought that was also a smart move. It tells me that they are internally having aggressive targets which they're trying to reach, but of course they don't want to communicate that to the outside in order to kind of protect the teams. But still, here talking about this the way publicly, also showing the confidence that, well, there might be even more upside to this. So all in all, great communications in my views and really the right signal. Now then, they also stressed this point, which I already noticed just from the earnings report, that yes, they are focusing now on accelerating the pace of new products, and here notably the term full stack technology. So that means also some sort of vertical integration, controlling the main areas necessary in order to deliver the best vehicle experience and technology, and also of course improving on the cost side. And then this time they announced something with the 3 new models in 2022 and the mass market entry preparation, for which the first one was kind of already what I was expecting in a way, and I talked about this on this channel before. And then the mass market announcement was something that I previously commented as well before, and I said like this is not really necessary in my views, but possibly they will do it and not under the NIO brand. That's exactly what they announced now as well. So for me, I know it is really lots of investors out there see this and are really excited about it, but for me, it's not really too much in my focus. I think NIO can be as ambitious and according to my business case, achieve something between 1 to 3 million of annual production just with the current brand and also with the models in the premium segment that have been announcing. For me, that would be already kind of enough in order to validate my business case or the investment thesis on why I'm investing in this company. But now this additional mass market segment obviously opens here the huge potential and also all of the fantasy around how many more models they could be selling. I possibly will do a separate video and just diving into that topic. So of course, from an investor's perspective, this is certainly something nice to have, and it's a good announcement which should also strengthen the excitement into the stock. But personally, I'm not giving it too much weight as of now. Previously, we have seen NIO already doing something similar with the NIO JAC venture. So I'll take that as something nice to have, an addition and something to watch in the coming months as how this will be unfolding. Then regarding the other two models, which we really don't know which models they are, and I think that was really smart and nicely done by the management here this time. Again, teasing investors, make them excited for NIO Day, put some expectations into next year about what's going to happen. And then, yeah, we know ET7 is coming. I think judging from what I see on social media, this will be a big thing for NIO, and I think lots of people are very excited about it. And then most likely also going to announce the little brother of the ET7. So my best guess is the ET5 will be coming with NIO Day, and then possibly a second car announced, which would be, well, I rumored it before, the Project Gemini, possibly something in the area of autonomous driving. Some rumor it's going to be kind of a supercar similar to the EP9, but more in a more mass market produced kind of fashion and stuff like that. So we don't really know yet, but putting that argument or this line here in this earnings, I think was a smart move in order to get people believe in this big vision of the company. And this really shows what I mentioned before, that NIO seems to be quite confident currently about what they're doing. And in fact, they even argued further and said that our R&D efficiency is quite high, and I believe this is the common standing of everyone. NIO has been able to launch products one after another in a very fast manner. And going on Li Bin mentions, I believe NIO is the fastest company in the industry to deliver the products to the market. Averagely speaking, the R&D timeline for us is around 2 years. 2 years is really incredible in automotive, which is already the fastest in the auto industry. And this year we have already kicked off many R&D programs. Starting off from the third quarter of this year, we believe that we're going to step up our R&D expenses due to the team size and the programs that we have in the R&D pipeline. So he mentions that previously they announced how much budget they're going to spend on that, and that now they're going to actually also really spend that money. So that's also kind of managing expectations for investors here. And of course, some people may not like that, because that ultimately could also mean that NIO is not going to show a profitable quarter in Q3, for instance. But he's setting the expectations, clearly argues of why this is the case, and makes it actually sound very positive. And as I mentioned before, speaking about my expectations, I think that is clearly the stage in which NIO is in. Right now, they should actually invest the money in R&D in order to gain competitiveness. And yeah, using these kind of strengths, which they're having, definitely the speed in China and their R&D timelines, which are incredibly fast in the automotive space. And then here's what they talk more in specific how this is going to look like. So first of all, about their vehicle platform. NIO is currently still in the technology platform 1.0, and here he makes another important point. He says that this early platform, which has been obviously developed years before, is still good or better than the competition here, than Audi, BMW and other EV products. So he says basically that the current products are still competing well in the market. And here, once again, he's quite confident about saying that I think our product actually does not belong to the same generation with the internal combustion engine products. But obviously the new models will all be based on the new 2.0 platform, so a newly developed platform, also introduced now with the ET7, with the new autonomy standards, for instance, also having this new sensor suite and so on. And so we can expect that also the older models like ES8 will upgrade to this new platform, giving them more capabilities and making the cars just better in general. So not only will they migrate from the 1.0 platform to the 2.0 platform, but also in late August we will release NIO OS 3.0, which brings a new UI, better design, new features and optimizations for also the existing cars. So for instance, XPeng is really doing a good job in terms of the speech recognition. It's really fast, and of course we know that Nomi, for instance, has a good speech recognition too, but it is, I have to say that it is slower in terms of speech recognition than the XPeng models. So I would say the Chinese companies are leading here on a global scale, to be honest, but NIO seems to have realized that they need to catch up here a little bit also when it comes to such kind of functionalities. They can do that with a simple software update. There are also users complaining, for instance, about the navigation functions, which are now based on Baidu Maps, for instance. I think they may actually change the provider to something like Gaude, or I'm not sure if that's really happening, but anyways, I think with the new UI UX refresh, they certainly want to tackle some of these issues and come back to being the leading part here on the software side in China and make the cars better usable with a nicer user experience. Part of the experience is obviously also NIO Pilot, which has exceeded take rate of 80%. So 80% of buyers of NIO cars are now also using the NIO Pilot and buying them with the car, which is great for the margin. Speaking about NIO Pilot, they also highlighted how this will actually improve further with the new autonomous driving as a service model that is going to be featured with this new NT 2.0 platform, and which will have a much better margin than, for instance, NIO Pilot today. And that is exciting to see this kind of confidence. First, at the big take rate of the current NIO Pilot, but then NIO showing and also guiding here and setting expectations for future margins. And obviously, this is something which sets NIO apart from other, let's say, for instance, the legacy auto manufacturers who cannot offer such kind of subscriptions right now. And this essentially makes NIO also this kind of a technology and software side business with the subscription revenues. And in my business case, personally expecting long run, this could make up close to 10% of the overall revenues of the company. So quite a substantial amount of revenues coming from there and high margins. And this is the exciting part of NIO's business model. So I think they managed to strike the right tone here in the earnings call and said, like, we believe that the gross margin and the vehicle gross margin will improve in the future. They even give the gross margin target of around 25%, excluding even the carbon credits. On the other hand, they managed to explain well why the margins for this quarter have been lower, why they might be a little bit lower in the coming quarters when they focus more on this R&D expenditures. But still, they've highlighted successes, for instance, also in this case, that despite the fact that they've sold more lower vehicle margin products like the ES6, still they increased sustainably the vehicle cost reductions there. And so this is, I think, the right communication for investors, giving them a good guidance in what will be the outlook. Extremely confident, extremely bullish, and on the other hand, arguing why they are working on the operational side the way they are doing it right now. And so that explains also, I think, a lot on the margin side of the business. And also on the operational side, where also in the live stream before, I was kind of a little bit more disappointed on why these numbers have been showing to be lower than my expectations there. And so in general, I must say that this is more professional than in previous earnings that NIO has done. And also I think now Li Bin and Steve Feng here as the CFO, they're working quite well in a team at communicating stuff like that. Something which I was hoping more Chinese companies could actually manage to do, because this is so important for investors to understand. More positive news we had on the take rate on the battery as a service in July, which has reached 60%, so that is still growing. And very interestingly, they also talked about the BAS model for Norway and talked about that the Norway User Advisory Board, which by the way was kind of oversubscribed, more people have actually wanted to join it than they anticipated, which is good news, and it once again shows their user centricity. But they mentioned that also there seems to be quite a big request or demand for this model to come to Europe, and I have done a video before that I thought, based on some of the hirings that NIO is doing there, that they're actually also bringing not only the swapping stations but also the subscription service to Europe, and that was now confirmed kind of here in the earnings, that users in Norway are excited about it and that they're gonna bring this model to Europe as well. So in general, the earnings report in combination with this earnings call, I must say, is really on a positive side and really well grounded. It is kind of sustainable, I would say. It shows that the company is in a very healthy state right now. For instance, take the $7.5 billion in cash that they still have on the cash position there, and analysts were asking them like, when are you gonna spend this money? And at the same time, NIO is already kind of showing almost close to be to profitability, which in my views, once again, they don't need to please Wall Street here and you know, show a profitable quarter in a very soonish time. I think they could, if they wanted to, if they book some of the credits and if they reduce the costs for just a quarter, they could now show profitability, but that doesn't seem to be in focus right now for NIO, and I think that it's good. And they have really managed to well argue both in the report with setting some expectations and some exciting points there, but at the same time, you know, really saying like why things are, you know, having some bad downsides there on the cost side and on the margins and so on in the short term. But you know, that's really good to see, also in the matter that they are both conservative but at the same time also bullish in their argument. And I think once again this comes back to the mindset of Li Bin as an internet entrepreneur. He is possibly in favor of this Amazon-like model of reinvesting all of the free cash flow, and they have now pumping 1.2 billion in cash that, yes, they need to pay suppliers at some point in time again, but this is all because of the lean business model of NIO, of not actually having capex to spend on a factory build and such. They have this huge income directly of cars that are being made to order and then sold, and then all this cash come in immediately. They can spend it on, for instance, also expansion plans and so on. All the while they have the 7.5 billion in cash that they can use. And so these prospects are really looking good on the long run. And I think investors should actually take this away from this call. And in my views, this will once again, and I'm going to reiterate that, in my views, this should have investors look out towards the end of the year and rather get excited about this company. And I think we should, on the share price level, retest the all-time highs again towards the end of the year. That is my personal expectation. That is not investment advice, but I think how I'm reading this earnings, once again, there is not much room for a big sell-off based on these fundamentals, maybe in some overall market issues and so on. And I think this has also been largely the issue with NIO selling off during this week. Going to speak about that in a separate video about what's going on again with Chinese stocks and some of the macro indicators and economic KPIs there. But anyways, that is my takeaway now in combination with both the earnings report as well as the earnings call. Let me know down in the comments which points I missed or what are your personal views on that. And yeah, thank you guys for watching this longer one during the weekend, and see you in the next one.